All right. Hey, everybody. All right. Let's go ahead and get this kicked off. So first and foremost, hope everybody's having a good evening. And thank you guys so much for spending part of your evening with us tonight. Hope you guys are having a great summer. Can't believe we're already into August, which means we only have 5 months left in 2026. If you guys haven't met me yet, my name is Adam Lang. And in just a moment, I'm going to be introducing my co-host, Benjamin Adams. He's one of the top mortgage professionals in the country. But tonight, guys, we're going to be focusing on something that is really, really top of mind now more than ever, which is one of the biggest questions that we're still getting on almost a daily basis right now, which is just, how are buyers actually making home ownership affordable in the Denver local market here? So we're going to walk you guys through a bunch of stuff tonight, strategies, loan programs, more than anything else, just like opportunities for just how, buyers are actually succeeding right now. And hopefully just give you guys a clear roadmap for, your own personal home ownership journey, if that's one of your goals for this year or maybe in the next year or two. So one quick little housekeeping note before we get started. As we go through everything today, it's going to be kind of like drinking out of a fire hose. So on the screen, if you guys are on your desktop version, you guys are going to see this on the right-hand side of your screen. If you're on mobile, it should be down on the bottom. And basically, it's a private chat feature. And this is going to be allowing you guys to leave any questions, engage with us if you choose to. But if you have any questions as we're going through this stuff, just try and ask that in real time as we talk through that specific point. And if we can, we'll just answer it right then and there. But if not, we'll make sure that those are the first questions that we'll answer in our live Q&A at the end. So with all that being said, Ben, what's going on, man? Happy.
Hey, I'm so glad to be back on tonight. Wow. Is this call needed more than ever with some of the affordability challenges that we're having right now? So thank you for having me on. Thank you for putting this together. And I cannot wait to dive into some of the information we have to share tonight.
Yeah, definitely. So guys, before we kind of bring it full circle and let Ben share some really, really good stuff, I just want to just talk through a couple things that I put together. Affordability has become, without a doubt, the number one challenge for pretty much every buyer right now in the Denver market. And I think what a lot of people just don't realize is that there are a lot of still very real ways to make it work. And the market, it hasn't just completely become impossible. It's just changed. And the buyers who we are both working with still on a regular basis are the ones that are succeeding, are the ones that are understanding just how to adapt and are still getting these great deals today. In fact, in a lot of cases, some of the best deals that any buyer has been able to get here for several years. I'll talk more about that here in a little bit. But, the buyers that are, out there today, they're doing one of two things. They're waiting or they're guessing. And both of those are unfortunately negative because they're missing all these key opportunities that oftentimes are right in front of them. You don't need to rush, but you do need a game plan. And that's what we're going to go through tonight because, timing doesn't always beat strategy. Confidence, however, always beats guesswork. And preparation is what saves buyers actual real money. So that way, if the home does pop up that you've been searching for, you should already know exactly what your next step, what your next move needs to be. So we're going to talk through a lot of the stuff again tonight, exact strategies, how to get lower payments, how to compete, how to actually win. And if you guys just understand just a little bit of what we're putting down tonight, you're going to be in a completely different position than 90% of the other buyers out there. So really, really excited to do all of that tonight. But before we do, I'd like just to kind of kick things off with just introducing Ben. So, Ben is first and foremost just one of my best friends. I've known Ben for a very long time. Colorado native, CU graduate. I said that kind of weird. Over 22 years of experience, well over $300 million of loans he's funded. Just a lot of really, really strong accolades. And I think my favorite, though, of all of these is I love just following people and engaging with people that I look up to that actually have taken action and actually are doing what we're talking about. And Ben, especially with real estate investing, is a really good example of that. So if you guys ever have questions about, rental properties, short-term rentals, long-term rentals, whatever it may be, he's a really good resource as well for that stuff. So don't be a stranger. If you guys have questions on that kind of stuff, definitely reach out to Ben.
Well, I certainly appreciate the introduction, Adam. Now, why listen to Adam? Well, let me introduce you. Adam is a 42-year Colorado and Denver native, recently ranked 5th out of 344 Denver agents in sales volume. That's important because 75% of agents this last 2 years have not closed a single deal. So he's one of the top agents in Denver. He's also a certified negotiation expert. Very, very important for some of the things that we're going to talk about later tonight: temporary buy downs, permanent buy downs, getting the seller to pay for those things, seller concessions. You want to be working with someone who is a negotiation expert. He's also the host of Living in Denver YouTube channel, and then the co-host along with me of the Pursuit of Progress podcast. So what a resource, Adam. Thank you for putting this together tonight.
Yeah, thank you. Appreciate that. So guys, if you are able to, if you want to leave a comment in the chat, I always like to start us off just with a little pulse of just how you're feeling right now. Do you feel confident about buying a home in Denver in the next year or two, or is it just completely overwhelming? So 10 being that you're really confident, 1 being, whoa, no way, no how, not a chance. So if you guys can, feel free to leave a comment in the chat, let us know, and we'll kind of we'll come back to this at the end and just see, hopefully, if you guys are feeling a little bit better after what we put down tonight. So what I'd like to do, though, is just kind of share a little bit of a recap of kind of what's going on right now in the Denver real estate market. So a year ago, the median home price in the Denver metro area was right at $558,000. And that was actually down this year about 4% year over year. Right now, though, it's so crazy is how much it's changed in the last couple of years from being an incredible seller's market, meaning it was a great time to be a seller, tons of buyers out there that were ready and willing to buy. That happened when we had such low interest rates, to now where it's kind of flip-flopped, where it's much more of a buyer's market, meaning that you guys, if you're on tonight as a aspiring home buyer, you have a lot of leverage, you have a lot of opportunity right now if it makes the most sense right now with your certain specific situation. But some of the things that are happening right now, the days on market is a little bit higher than we're used to. We're sitting, a little bit right at like 2 months. 60 days is what it was when I put this together about a month ago. I think it's actually down a little bit to like 52 days, but right around that mark. But definitely a lot of opportunity for buyers. That's the biggest thing I want you guys to take away. But 3 strategies that we're going to talk about tonight that are really, really great, really important right now in this type of market that we're in. How buyers are lowering their monthly payments. Number 2, just some of these hidden opportunities that a lot of buyers are missing. And then I think the third one's really, really good because it's what's actually working in Denver, but also what's not working. And that's just as important. So we're going to go through all 3 of these. And I'd like to kick off the first one with Ben leading the way because he is our expert when it comes to financing, lending, all that kind of stuff. And monthly payments are a big part of that.
Yeah. And Adam, if you don't mind kind of toggling through these for me,
Sure.
I don't have the resource tonight. It's not popping up on my screen for some reason. So if
Okay.
you wouldn't mind just kind of doing this as we go through here.
Sure,
but, one of the biggest challenges buyers are facing right now is affordability on a monthly basis. So there's really 3 types of affordability issues buyers are facing and that are really important to them. So number 1 is monthly payments, keeping that monthly payment affordable. When you think about monthly payments, there's 3 or 4 components of that. There's the principal and interest, the property taxes, the homeowner's insurance, and then also the HOA. So we're going to talk about strategies to keep that monthly payment affordable. Another one is coming up with funds for the down payment. You have other folks who can afford the monthly, but they don't, they think they need that 20% down. They don't have it. Well, there are down payment assistance programs. There's reduced down payment. There's minimum down payment. There's first-time home buyer programs. There's even first-generation home buyer programs where if you are the first person in your family, meaning that your parents did not own a home, but you are getting qualified, you qualify for not just first-time home buyer, first-generation home buyer incentives. And those are really, really impactful. And then also learning about ways to get the closing costs paid for on your behalf. And that's where you need someone like Adam, who's going to be a certified negotiation expert. Go ahead and go to the next screen, please. So most buyers think their only option is to accept today's rate. And here's the deal. Rates have been all over the place. We hit the low 6s, high 5s back in February. Now, all of a sudden, a couple of months later, as summer is ending, there's been a lot of political things. The Iran news just does not go away. And all of a sudden, inflation is kind of back up on the radar and interest rates are back up near 7. Well, regardless of what rates are doing, smart buyers are negotiating the seller to pay for rate buy downs, or if you're looking at new builds, having the builder incentivize to pay down the interest rate, either on a permanent or temporary basis, which then will reduce the payment. And as you'll see in some of our examples, it can be very, very significant. So what does this look like? Seller credits can be used to buy down the interest rate. So that's where Adam says, I have this buyer. He goes to the seller and the listing agent or the builder, and he says, we're interested in buying this home, but we need, maybe it's $10,000, maybe it's 15, maybe it's $20,000. He says, we need $20,000 from you, so my buyer can then buy down the interest rate to make the payment more affordable. Now, there's a couple different ways to do that. There's a temporary buy down. And in the temporary buy down category, there's three different options. There's the 1-0, the 2-1, and also the 3-2-1 buy down. And then there's also the long-term buy down, which is the permanent buy down, which you're able to buy the interest rate down on a permanent basis. Here in the next couple of slides, we're going to go into some examples. So this right here are the three examples on the temporary buy down that we're going to talk about. So the 1-0, the 2-1, and then the 3-2-1. Let's go ahead and start with the 1-0, Adam, and I can walk everyone through this. So this is our scenario. Our loan amount is $500,000. Our interest rate is 6.5%. Our loan term is 30 years. All of that is in the top left-hand corner there. Now, if you look at the property taxes, estimated at $200 a month, our homeowner's insurance is $195, and then there's a small monthly mortgage insurance premium of $217. So our note rate in this case is 6.5%. So in a temporary 1-0 buy down, this is an example where the interest rate is bought down a full point for 12 months. So in this example, even though the note rate is 6.5%, for the first 12 months, the buyer would get an interest rate of 5.5%, and that would reduce their payment by $321 a month. So in this example, with a $500,000 loan, their payment for the first 12 months would be $3,286 before maturing to the $3,607 starting in year 2. Now, to qualify for this, the buy down fee would be $3,856.74. So $3,856.74. And so Adam, when he's submitting the offer, would go to the seller, and in the purchase agreement, he would say, we need $3,800. He'd write that right into the contract so the buyer can buy their interest rate down, and we're getting the seller to pay for that. This is considered a subsidy in the temporary buy downs. It is not considered a cost. I'm going to go into a little more depth in that after our 3-2-1 example. Now let's move forward to the 2-1 buy down example. So this right here is the 2-1 buy down. Exact same scenario. Loan amount $500,000, note rate 6.5%, term 30 years. Now the difference though is that instead of a 1-0 buy down, this 2-1 buy down means that you get an interest rate that's 2 percentage points lower for the first year, 1 percentage point lower for the second year before the note and the loan matures starting in year 3. So in year 1, even though the note rate is 6.5%, in year 1, remember, 2 full percentage points lower. So instead of a 6.5%, you get a 4.5% interest rate. That's going to save you $626 a month, and the payment is going to be $2,980.60. So for the first 12 months, you're saving $626. Then, starting in year 2, you're going to be saving $321 a month. The interest rate will be 5.5%, so your total payment will be the $3,286 number. And then finally, starting in year 3, the payment will mature to the $3,607. Now, because this is a 2-1 buy down, you're buying the interest rate down for a year longer and then also 2 percentage points longer. The buy down subsidy for this is $11,379. So in this example, Adam would go to the seller and the listing agent and would put the request in for $11,000. $11,379. And that sounds like such a big number. Like, is that really happening? Is that really possible that we can get the seller to contribute $11,000? The answer is yes. That is happening right now. On all of the deals I'm working on, the seller is contributing something. I closed a condo yesterday. The seller contributed over $10,000, and the sales price was only barely over $200,000. They contributed $10,000 on a deal where the sales price was barely over $200,000. So This stuff is happening right now. This is one of the most historic buyers markets in Denver. And that's why you need to know what your options are. That's why you need to have a strategy. And that's how you can take full advantage of this market here. Last example, we're going to do the 3-2-1 buy down. So 3-2-1 buy down. So starting in year one, same exact scenario, loan amount 500,000, note rate 6.5, 30-year fixed. So year one, instead of a 6.5, you get a 3.5% interest rate. You save $915 a month. Then in year two, 4.5% interest rate. So 2 full percentage points lower, saving this $626 a month. Year three, $321 a month saving. So for the first 36 months of this loan, you would save $22,361 out of pocket in temporary buy down monthly payments. And that is the amount that Adam would request from the seller. And it's allowed. These programs allow for it. FHA, VA, conventional, they all allow temporary buy downs. Now, here's the best part, though. This is the best part. This is a subsidy. This is not an actual cost. So a cost, you pay the $22,000, and then let's say interest rates come down a year from now, just organically. Well, for someone that has paid a discount fee on a permanent buy down, that money is gone, regardless of if you sell the property, if you refinance, if you do nothing, that money is a cost and it's gone. With a temporary buy down, though, that $22,000 fee is really a subsidy. So what's great about that is that if interest rates happen to come down organically, or if you decide for whatever reason that you're going to sell the property or pay the mortgage off, whatever the amount in the escrow account is for your buy down, you get that prorated amount back. So this is actually your money. The $22,000 in this example would be placed into your escrow account, and then a portion of it would be used every single month to fund or subsidize the monthly payment. So after a year, if interest rates come down, or let's just say that you need to refinance the property for whatever reason, your escrow account might have, let's say it has $12,000 in it. On a permanent buy down, that's a cost. You don't get any of that money back. But if there's a $12,000 balance still left in your temporary buy down account, you get all of that money back. So it can either be delivered to you after closing in the form of an escrow refund check, or it can be subtracted right off of your principal balance. The reason that's important is because you don't have to feel bad if interest rates come down. It's a way of hedging the market. It's a way of covering that interest rate risk. Or if interest rates do come down, you can still take advantage of lower rates because it's a subsidy. It is not an actual cost, and it's your money. Huge opportunity here.
The one thing I'd like to add to that, Ben, is for anybody that's watching tonight that maybe this is a little bit foreign to them, they're not that familiar with this. I talked at the very beginning about how much of a buyer's market it is right now, meaning that we have a lot of leverage. So let's just say a home's listed for $500,000. If it's been on the market for 30 days, maybe not even that long, maybe a week or two, there's a good chance that we can actually write an offer that is below 500,000. But it ends up being the same to the seller. But for you guys, the buyers, just think of these two examples. One being you offer full price, $500,000, but in the offer, there's a little line in the offer where we can put a seller concession. So we can put full price offer, 500,000, but then maybe we put $10,000 seller concession. So basically what that means is that the seller is really, netting 490,000. For you, the buyer, the benefit of still keeping it at full price, but then having that concession, that then allows you to use that towards what Ben's presenting right now. So you have the ability to really just tweak how you're structuring the offer that we put together. And that can really benefit you guys if this is something that could really be important to you and help you guys just with your budgeting and everything else.
Yeah. And, are there challenges in this market? Are there hurdles? Are there affordability issues? Yeah, there are. But there are also ways to combat and to overcome and get around some of those challenges if you're willing to educate yourself. But there are a lot of agents out there, and there are a lot of lending professionals that aren't familiar with these types of products. So you really need to be working with someone that is a specific market expert for the type of market that you're in. And keep in mind that not every market right now in the United States is facing some of these affordability challenges. If you're in the Midwest or the South, and if if you're in a city that has a population of 1 million and under, you're probably not facing these same affordability challenges that we're talking in Denver. So you want to be working with people that understand the market, that have their pulse on the market, that you know exactly what's happening, and they're actively closing deals. And that's what Adam and I are doing.
Yep. Okay, so that was the first part. So just to kind of finish this out, so there's lots of ways you guys can do this. As I just mentioned, asking for concessions. Even if the home is only on the market for a couple of weeks, we have so much power right now as buyers. And then again, just like Ben was presenting a few minutes ago, focusing on that monthly payment, not the purchase price. And there's so many different scenarios out there, different loan programs. Just make sure that you're working with somebody like Ben, as an example, that really understands all of these different options that are available, and just making sure that whatever fits what you're trying to accomplish, that's the one that hopefully you guys go with. Small adjustments and stuff like this can really end up being a massive difference in your monthly payment, how much money maybe you have up front, just as maybe a way to help pay for closing costs, maybe help for other, things that are important to you guys. So that was the first part. Now I want to jump into the hidden opportunities that a lot of buyers are missing, which is, again, so important right now more than ever here in Denver. There's a lot of ways to identify these types of opportunities. One being just any homes that are sitting on the market for a bit longer. Right now we're going into, August, 5 months left in the year. We're at a time right now where a lot of sellers that have had their homes on the market in the summer, if they still haven't sold, there's a chance that some of them are starting to get a little bit desperate. Not desperate maybe to the point of giving the home away, but more open to concessions, more open to maybe a lower price point. So being able to identify homes that might have this opportunity is really important. Another great one is looking for frequent price reductions. If you see a home on Zillow, you guys can actually scroll down and see where it says history, and you can see any price adjustments that have been made on that home. And if you look at the history and it's been on the market, let's say for 2 months, and you've seen already 2 or 3 price reductions, and that's telling you that maybe that seller is pretty motivated and they might be open to an offer even lower than what it's listed for at that point. So just understanding that it never hurts just to, find out, there's no harm in just putting an offer, even if it is a bit lower than maybe what you think they're going to accept. You never know. And then another great one too is homes that are on the market. They're maybe taken off the market and then they're put back on the market. And we're going to see a lot of this next year, maybe in like February, when a lot of homes start to really position themselves for the busy spring selling season. A lot of homes right now, since there is a lot of inventory, some of these homes, they're probably not going to sell this year. And seeing homes that re-emerge on the market next year, and again, you can see this by going to that price history, you're able to identify homes that are probably extra motivated because for a fact that they've been trying to sell and they haven't been able to. So little tactics, little strategies like this can really help. And then the last one before moving on is about poor marketing. So this is something that grinds my gears as a realtor, and especially as more of a marketing focused realtor. It's crazy how often you'll see, professional realtors just really cutting corners, having, iPhone pictures on the MLS instead of professional photos. Photos that maybe are showing a kitchen that's got a dirty microwave and a bunch of junk on the counters, things like that, oftentimes will completely will be enough to completely, turn off certain people online when they're searching on Zillow. They see a home like that, couple pictures, they see that kind of stuff, they just pass, they scroll to the next home. Sometimes those homes are still actually in really good shape, and it's just a matter of presentation and maybe just little things, fresh coat of paint, deep cleaning, stuff like that. So don't overlook some of these homes just because of poor marketing. That actually might be an advantage for you because a lot of other people aren't giving it the time of day to even actually go tour the home or dig a little deeper. So again, I kind of just talked about this, but a few other things just to really take advantage of right now more than ever. Don't assume something is wrong, like I just said with the pictures. Instead, schedule a showing. Go see the home in your own, lens. See it for yourself. Also, after we write an offer and we get it hopefully accepted, there's other opportunities even after that for you guys as buyers, the biggest one being during the inspection. So we have opportunities to negotiate even further at that point. And if it's already under contract, we know that seller is committed. So hopefully we have a little bit more leverage again there. looking for open sellers that are open to credits, repairs, flexible timelines, lots of stuff that can really be structured in a way that really sets us apart from other buyers and hopefully gets the deal done. So lots to kind of go into even further on this one. If you guys ever want to really learn more about strategy when it comes to writing an offer that wins, Ben and I also do a completely separate webinar on that. We have some recordings from some of these that we've done over the past couple months. If you go to either of our YouTube channels, you can find them there. But definitely, if you guys want more specifics on strategy on kind of some of that aspect of this, feel free to reach out to us and we can, go a little bit more deeper with you guys one-on-one.
Yeah, and we've been talking about using that seller credit and that concession more towards a temporary buy down or trying to make that monthly payment more affordable. But if you're someone who you're less concerned about the monthly payment and you're more concerned about the total out of pocket or the down payment, you can actually use that seller concession to pay for all of your closing costs and the prepaids or the homeowner's insurance for 1 year. And so just because it's written into the contract doesn't necessarily mean that you have to use it a certain way. It means that it's there at your disposal to be used in a way that you best see fit for the transaction. Now, if you are a first-time home buyer at the bank that I work at, North Point Bank, we have over 22 different first-time home buyer, minimum down payment, reduced down payment, and down payment assistance loan programs. And so if your goal is to get into a home with as little out of pocket, there are programs right now at North Point, the bank that I work at, where we can get you into a property, assuming that you qualify, for as little as $1,000 out of pocket. And that's the minimum out of pocket that's available right now. But you can get into a home for as little as $1,000 out of pocket. And that's also happening. I do a lot of down payment assistance loans. I work with a lot of first-time home buyers. I do a lot of first-generation loans, that program that I was talking about earlier. If you're a first-generation home buyer, we offer through Chaffa a $25,000 down payment assistance through our first-generation loan program, regardless of what the sales price is. And so the sales price could only be $300,000 and you still get the $25,000. The sales price could be $600,000 and you get the $25,000 down payment assistance. There are certain eligibility requirements as far as credit score, household income, etc. But it's something that a lot of folks qualify. And because we are in a high market area, high income, high affordability area here in Denver, a lot of these income limits on these programs are very high, 170, 180,000. And so as long as you're below that, you have a FICO score of 620 or greater, you may be a candidate. So if you'd like to schedule a call with myself or Adam, discuss further, please know that we're both here and available after the call to schedule those.
Yeah, I remember you shared on our last webinar, some clients you had just helped that had that $1,000 out of pocket. That's pretty incredible, you guys. Definitely something just to keep in mind. Okay, so now let's just jump into the third one, which is probably my favorite. Again, what's actually working, but also what's not. Not to be a negative Nancy, but I think there are some things that are really important to learn from other people's mistakes and don't do. So first of all, what used to work versus what's working now. What used to work, and I'm talking about used to work, especially about 3 years ago when it was just a crazy, crazy real estate market out here where people were, there's a line out the door of, people wanting to see the home the day it hit the market, multiple offers, all that kind of stuff. Back then, what worked was just coming in way over asking price or eliminating things like contingencies. A contingency would be something like an inspection or an appraisal. No longer is that what needs to happen or really should happen. Instead, what's working now is, again, going back to very well thought out, well structured, very creative offers that have not only strong terms, but flexibility. And we're thinking outside the box. We're really understanding how to, again, find out what the seller really is looking for, what matters to them the most. And by knowing that, creating this win-win, not just for us, but also for them. And those are the ones right now that are getting across the finish line and really working out best for everybody. So, it's not about overpaying. What's more important now, it's about positioning and just being very strategic. So again, what's not working, overpaying just to win the deal, waiving some of these very important key protections, things like an inspection, an appraisal, stuff like that. Just also probably one of the biggest ones on this list is just waiting and hoping that rates are going to drop before actually doing anything, and just writing these generic copy paste offers. I think going to this third one, again, the waiting and hoping rates drop. 90% of people out there that want to buy a house, that's what they're doing. They're waiting. They're sitting on the sidelines. They're not doing anything. They're not even educating themselves like you guys are tonight. So if nothing else, great job just for taking initiative and action just to better yourself by education. People aren't doing that. A lot of people are just doom and gloom. They're sitting on the sidelines. They're waiting. And because of that, there are so few buyers that are active in the market right now that if you are one of those, you have so much power. You have so much ability to really get a good deal. And that is really what, for most people, is what makes money in real estate. It's not how much you sell it for. It's really on the buy side. It's what you buy the property for. And that's really when you get the most advantage is on the buy side, not the sell side.
Do we have any movie fans here that saw Masters of the Universe this summer? Because if you have, there's a scene in that movie, He-Man, what he says is, "I have the power." And then the lightning bolt comes down and he turns into He-Man. That is you.
That's you
have
guys.
The power. So you are the buyer. You have the power. And keep that in mind. And Adam and I are here to, we're your team. We're here to help facilitate and support and encourage and promote and guide you. But you have the power.
And the last thing I'll say before moving on is just how important this last line here on the slide in bold. The strongest offer isn't always the highest, it's the smartest. And what I mean by that is going back to, as an agent myself, picking up the phone, talking to the listing agent, finding out what's most important to the seller, and then crafting the offer accordingly, because it's not always just the price point. There are so many reasons, I think right now more than ever, that people are selling their homes. And unfortunately, a lot of it can be a bit negative. Divorce, maybe somebody lost their job and they need to downsize. Maybe a family has their only child that's leaving the nest and they're going off to college. There's different aspects of people's lives why they need to sell. And if you understand that and you craft the offer accordingly, that oftentimes will perform or beat out other offers that are maybe only focused on the price. Again, we go into all of this in a lot more detail in our other webinar, but the only quick thing I'll share on this as an example is what we call a PCOA, or a post-closing occupancy agreement. And what this is it's basically allowing the current seller who lives in the house to basically become a tenant for up to 60 days after you purchase the home. So obviously this only works if it makes sense for you guys as well, but this is a great way let's just use the example of a family that has their kid going off to college. Right now we're in the summer months, maybe they really wanted to enjoy the last summer at home before they start school in the fall. Maybe they're going out of state. So maybe the family is selling their home and we put an offer in June or July, but we allow them after the closing date. Let's say the closing date is July 15th. We say, you know what, we're going to close on July 15th. We're going to actually allow you to stay in the home until August 15th for an extra 30 days. You can charge them rent, or you can just let them stay there for free, depending on how, aggressive or strong we want to make this offer. But what that allows them to do is then not only get the proceeds of selling their home, hopefully to maybe use that money to then make an offer on a new house, but also that gives them the ability just to maybe enjoy the end of summer with their kid before they go off to college. So something like that. It sounds pretty basic and simple, but that could be a great way to make the offer even more valuable to the seller than just a price point. So just really important to understand that, because oftentimes that is what it takes right now to get your offer accepted and win.
Yep.
So recapping that last one, the buyers winning right now are doing it differently. They're lowering their payments through strategy, like Ben was saying, different ways like 3-2-1 buy downs, 2-1 buy downs, 22 different other options for first-time home buyers. So many different things out there that you can really take advantage of. Buyers are also really finding these opportunities instead of staying on the sidelines, still being brave enough to just at least educate themselves and understand what is possible. And then what I just was sharing about offers, just understanding that it's not always the highest price point. Oftentimes it's just the offer that best fits what that seller is also trying to accomplish. It's just not impossible right now in the market. It's more important to understand it's just really requiring more strategy than ever. So that was the 3 points, but my favorite, the negative Nancy aspect I teased, what's not working. So these are 3 of the biggest mistakes that Ben and I are still seeing, and more importantly, how to avoid them. So I'll do the first one. I'll let Ben do the second, and then I'll do the third. So the first one,
just in case everyone's wondering, he's just sharing what the negative Nancy things are, but he is not a negative Nancy. I've already beat that out of him. So he's sharing what those are, but that is not him. He's positive. I'm positive. And I am positive we are going to help you if you give us the opportunity.
Yeah, you can call me Positive Pete. So the
Positive
first
Pete.
one is overlooking hidden costs. And this is a big one, you guys. So I noticed, who was it? Is it Ursula? Somebody was from Texas. Yeah, Ursula.
Yes.
So Ursula, you're coming from a state that also has pretty advantageous taxes, but in Colorado, our taxes here are also fairly reasonable, but it's important to understand that, two homes in two different areas within Denver can be very dramatically different when it comes to property taxes. So when we're talking about overlooking hidden costs, not only is it just important to understand that there's some of these other things that could be costs, things like property taxes, insurance, maintenance, if it's maybe a condo and HOA, but also just understanding, for example, the property taxes, how two areas in Denver could have a different property tax rate. So it's important to not only understand what we're sharing here, but also to actually dive deep on a more specific level. If you start to look at homes, Ben and I are both great at doing this for any of our clients, where we'll actually pull all of this info so you really can compare. Let's just say you have two homes that you're interested in, being able to compare not just the price of the home, but what the actual total costs it is going to have to own that home. You could have two homes at $500,000, but one of them is in an area, for example, near where I live in southwestern Denver, in an area like Sterling Ranch, which has a 1.4% annual property tax rate. So $500,000 home, that's almost $7,000 annually in property taxes. Or a same $500,000 home that's maybe in a much more established part of Metro Denver that is only about 0.5%. In that case, you're looking at maybe $2,500 a year. Two exact same priced homes, just with one simple thing like property taxes, how much different the two can be. Again, home insurance, we have a lot of things going on out here like hail, fire mitigation, fire risk, lots of things that could also add to these costs. So just understanding that there's other things than just the price of the home that could impact not just the price that you're going to be paying on, or the monthly amount you're going to be paying, but also just understanding how this can really affect the type of loan you're getting, what you maybe qualify for, all that kind of stuff. Ben, you want to do this one?
Yeah, I what was number 3? Was number 3 appraisals, or was it the home inspections?
I'll do number 2. I'll let you do number 3. You like number 3.
Okay.
So in the home inspections, this is a big one, you guys. Just understanding that not only is it important to do a home inspection, regardless of if it's an old home, if it's a new home, any home that you guys are interested in, do a home inspection. But for anybody that's on tonight that's from out of state, in addition to just the main normal home inspection that maybe you've done previously wherever you guys live, what's also important in Colorado are 2 additional inspections that I always have my clients do. The first is what we call a radon inspection. And this is basically this odorless gas that is very common out here. I think it's like up to, I don't want to say the wrong percentage, I think it's like over 50% of homes in the Denver metro have reported having higher than kind of the reasonable number, which is 4 ml. I forgot the name of the measurement that they use, but over about half of the homes in Denver are above whatever that rate is, that measurement is. But what happens is when we have an inspection done, we also do a radon test. And it's just this little device that they put in the lowest part of the home that'll be lived in. So typically like a finished basement. And they basically just let this little device sit for 48 hours, taking the measurements. And if it comes back high, then we have a very easy opportunity to leverage this in our negotiations in that inspection objection, which is allowing us to basically say the rate or the measurement came back high. We'd like to get, $2,000 as a seller concession to install a radon mitigation system. When you have something like this, which is considered health and safety, it's very easy to get these types of inspection objections accepted by the seller. So that would just be one example of something that maybe you guys aren't used to back in Texas or other states, that radon test. It's cheap. It's only about $100, well worth it. And then the other one is what we call a sewer scope. So again, depending on where you guys are at in the country, in Colorado, we have a lot of very mature, big trees that have a mind of their own. And especially in some of the neighborhoods in Denver, maybe in like Wheat Ridge, for example, which is where Ben and I both grew up. We have a very mature area in Wheat Ridge that's got a lot of homes that were built in the 50s. These trees now that were, maybe planted back then that were 2 feet tall, now they're 100 feet tall and they've got roots going everywhere. Those roots can oftentimes impede on the sewer line, which connects the home out to the main sewer line, typically in the middle of the street that your home is on. And sometimes that sewer line can get significantly impaired by these roots, also just by the age of the sewer line itself. They used to build them out of clay pipes, which oftentimes would deteriorate over time. So these sewer line scopes are only about $150, and it is, something that oftentimes comes back with no issues. But man, I'll tell you guys what, it is a massive savings to understand this ahead of time, because if you don't do this and all of a sudden your home backs up and you have all these issues, and then you go to find out that your sewer line is maybe in serious disrepair and needs to be replaced, it can be very, very, very expensive. We're talking $15,000, $20,000, $25,000. I think Ben actually had a deal. I remember you shared on the last webinar we did last month that you had a client that had something like this happen, and they were able to negotiate this in the seller concessions. I think they got like $10,000, $15,000 for it, something pretty
15,000.
Yeah. So very, very, very important just to do those 2 additional inspections on top of just the main home inspection.
Yeah, and then I wanted to talk about emotional decision making. Buying a home is a huge financial decision, but you don't want to let your emotions overrule practical considerations. That's why it's so important to have your boundaries and have your goals outlined, not just what you're looking to accomplish with the purchase, but what are those financial considerations? So define what your monthly payment range is. So as you're looking at properties, you already want to have an idea and you want to have this written down. I want my payment to be X amount of dollars through X. So I'm willing to have a monthly payment of $3,000 to $3,500, for example. You want to know what your out-of-pocket or down payment assistance goals are. I'm willing to come to closing with X, or I'm willing to come to closing with $10,000 or $5,000 or whatever that number is. You want to have those defined, so it will help keep you grounded during the home buying process, because it can get very emotional. We're human, and there's part of this process that is emotional, and it's important that it is emotional. When you start looking at homes, you're not just thinking, is this going to be a roof over my head? You're thinking, this is where I'm going to spend the next 5 or 10 years of my life. This is where my family is going to live. My kids are going to be running in the backyard there. My dog is going to be going through that doggy door, making a mess on that carpet right there. You start to envision some of these things, and it becomes very real and very emotional. But if you let those emotions start to dictate and take control over your decision process, that's where people have regret sometimes, because they lead with the emotions and not with the financial facts. I always love sharing this story. A couple of years ago, I was doing an open house in my neighborhood, and my role at the open house is I was the greeter. So I was the greeter. The real estate agent was back in the kitchen. So as people would come in, I would introduce myself, I would shake their hand, I would greet them, and then I would walk them over to meet the real estate agent who was in the kitchen. Now, there was a family out walking their dog. They saw the open house sign and decided that they wanted to come in and check out the property. As I introduced myself, I just asked them, are you guys in the market to buy? Do you live around here? They're like, yeah, we're walking our dog. But we're not in the market to buy. We're just, we saw the open house sign, going out for our morning walk. We have no interest in buying. We just live down the street. We're not in the market. That's what they tell me. So I go and introduce them to them. That's fine. Come check out the home. Introduce them to the agent. Go back to my post at the front door. Well, about 20 minutes later, they come up to me and they start talking about wanting to write an offer. And their dog is still tied up on the post out front. He's like yapping, and I'm thinking, like, when are they going to come get this dog? And now they're talking about writing an offer. Like, you don't want to be that person where, like, they were literally walking their dog on a Sunday morning, taking him for his mile walk, and now all of a sudden they're talking about writing an offer on a $500,000 property. No, that is not how you want to do it. So you want to be emotional, but you want to be grounded. You want to lead with your financial facts. You don't want your emotions to be the thing or the drive or the cause that is making those decisions.
I think one really good exercise for this, you guys, is whoever you're going to be buying the home with, just sitting down at the dinner table one night and just talking through what are your non-negotiables, what are the things that are most important to you in the house, and making sure that you don't waver from those. So, let's just say that you really want to have, a 2-car garage, and you really want to have minimum of 3 bedrooms. You really want to have the primary bedroom on the main level. Well, then you all of a sudden go out and look at homes and you see this other home that's got something really cool that is unique and you love it. And it's like so different and you get really emotionally attached, but oh man, it's got a 1-car garage and it's, got the main primary bedroom upstairs. Well, if those things are really important to you, don't let emotion, steer you away from what you guys have really already upfront decided on as being the most important. This is really, really important also because by doing that, you're not ever going to go see those homes that don't really fit what you're looking for. It's something that sounds very simple and basic, but man, it happens all the time. Okay, so before we jump into the Q&A for everybody that's stuck around with us tonight, a couple strategies for success we're going to be sharing with you guys. After tonight, you guys are going to get an email with a bunch of other free resources, but a couple things that are just really important. Again, staying flexible, being open to different home types, different neighborhoods. One thing that I've been telling a lot of my clients recently that I think is really, really impactful is it's almost like more important than the house itself is the neighborhood. So really making sure that you're buying a home in a neighborhood that really fits the lifestyle that you want to have. So if you have certain things that are really important to you, maybe it's having parks nearby, maybe it's walkability, maybe it's a certain school district. You can't change those types of things, but you can change a lot of the aspects of the house. So if you at least get yourself in the right neighborhood, things in the house itself that maybe you don't like, maybe it's got a weird paint color, maybe it has old outdated appliances, those things you can change. You can update those things, but you can't change or update the neighborhood. So just really making sure that you've identified the right location first and foremost. Definitely consider new construction. There's a lot of really good opportunities right now with new construction, especially with certain types of incentives. Oftentimes with new construction, they have a quota they have to meet at the end of the year. So as we kind of get into the last few months of 2026, if you guys are actively looking now, that's a great opportunity for you sometimes with new construction because they have to sell a certain amount just to kind of meet their goals. And they might be a little bit more aggressive with what they're willing to take. And then like Ben was sharing about closing costs, just understanding there's other fees, other costs associated with buying a home, as well as owning a home that are really important to understand. So just be aware of that kind of stuff. If you guys want to dive any more in depth on like specific aspects of the contract to close phase of buying a home, so from writing an offer all the way to the closing table, I've got a really, really good 5-part video series that I'll also be including in the email later tonight. If you guys want to dive into that, be my guest. If you have any questions afterwards, feel free to reach out to either of us. And then again, a lot of other stuff that'll be coming in that email later, including Ben's info, contact info for both of us. If either of us can do a one-on-one strategy session to help you guys out, we're always willing and able to do that. Very low pressure. We just want to learn more about you guys and hopefully provide value in a few different ways. So definitely take advantage.
If you have questions, if you want to talk strategy, if you want to share details of your scenario, there's not any cost, there's no risk, there's no pressure. Just schedule the call. We'd love to. Yeah. And Adam likes having conversations just like this. We want to be a resource to others, whether you do something now or not, whether you use us or not. We just want to be able to put people in the best position possible. And that's why we host these webinars every month, just because there is such a lack of education out there in the market. But the challenges and hurdles are real. And so people don't know these options exist. We want to let them know that there are options. There are ways to tackle affordability, get your closing costs paid for, to address down payment concerns. You can.
Yep. And I would just kind of piggyback off what Ben just said, just to kind of recap you guys. I think the very first step, if you're just kind of getting started with all of this, I think one of the best things you guys can do is start off by just connecting with somebody like Ben. The first step for most home buyers, if you are going to be using a loan to purchase the home, is just to get a pre-approval started. And the only thing I wanted to just kind of touch on here and why I think it's so important to just mention this is even if you're not considering buying maybe until next year, still having that introductory call with somebody like Ben just to understand what it's going to take to get pre-approved, and even going through what Ben calls a soft credit pull, just to understand, where you're currently at, maybe knowing what you need to get to in order to be in the best position possible next year or whenever it is that you're going to be actively trying to buy a home. Because what happens so often is people don't do that, and then they're ready to buy, and then they connect with somebody like Ben and they find out, oh shoot, I'm a self-employed and I need 2 years of certain documents and work history in order to qualify. or, maybe you reach out to Ben, you find out your credit score isn't exactly where it needs to be. Well, Ben's able to provide you guys with some great tools to improve your credit, which sometimes can take a couple months to get to where it needs to be. By just at least knowing that early on in the process, that's going to put you guys in a much better place to succeed whenever that time comes. But again, guys, that's the first step. Also, just, finding a realtor, somebody like myself, I'd love to connect with you guys, just help getting started with that home search, just understanding some of those neighborhoods, just really understanding what you guys are looking for. And we have a lot of other valuable resources we guys can provide you guys with just to help with that kind of stuff. But with all that, let's just jump into, if you guys have any questions. I know I saw one Ursula, I think, left. Amanda, or if anybody else on tonight has any questions. I didn't see any come through when we were going through tonight's presentation, but
I'm getting one from Jackson. He's sending me a message. He's not using the chat, but he's just sending me a message direct. Adam, he'd like to know, how common is it with this being more of a buyer's market, being more inventory? Do you still see multiple offer situations right now, kind of all things considered?
Well, I think one of the craziest things right now in Denver, and this is something that, just to be honest with you guys, I didn't really realize until recently firsthand, because it hadn't been a personal thing that I had dealt with until just in the last week or so. But Denver is very unique right now because it is very micro neighborhood specific, meaning that it's not just a blanket statement of saying that, the entire city of Denver is a strong buyer's market. Yes, for the most part it is, but there's certain neighborhoods that are still selling very quickly. There's other areas that are taking significantly longer, and it just really depends on the specific micro neighborhood that we're looking for homes in. And I have a couple listings right now, and one of them's been sitting on the market for, actually met with the seller today, and it's at 69 days today, so a little bit longer than we'd like to see. That's an area that's been pretty challenging. Not a ton of buyers looking in that specific area. Ben and I actually have a client that we were with just this past weekend where we wrote an offer, and we're competing against, I think, at least 3, if not 4 other offers. So, there are very different just scenarios happening depending on where we're searching, where we're looking for homes. And, that's just kind of how it goes. I think more importantly than that is just making sure that we're always, giving ourselves enough information to make that best decision possible whenever we do find a home that you guys like. And that we're just really doing a good, thorough job with having a pre-approval in hand, being able to have everything we need on our end. So when we do write an offer, we can make it as strong as possible, and we can really provide confidence to the seller to hopefully be the one that gets accepted. Ben, is there anything you want to add to that?
Yeah, I think it's a great point. And it is, I always say that if something is priced aggressively and it shows well and it's been taken care of, if you're finding that property attractive, even in this market, the reason that you're finding the property attractive more than likely is because it checks all your boxes. Price, it's affordable, it's in the right neighborhood, it has curb appeal. And if it is checking those boxes, and we know that it's been on the market for only a day or two, well, in some cases, like you're saying, other buyers who are out there may find it attractive as well. And I have seen situations like that where multiple offers can still pop up, but don't get discouraged if you don't get something, because there's still a lot of great properties out there. There's a lot of great neighborhoods, and you just have to have the right attitude about it. And if you have that patience, if you have that financial discipline, and you don't compromise those emotional boundaries, like, you will find something that meets your needs and your goals.
Yeah, we've had a lot of, I have had a lot of past clients, just past experiences where, buyers that haven't done what we're talking about, they haven't been prepared. And when you're not prepared and you haven't done this upfront, work to be educated, to really be keen on what is out there and what's a good deal, what's not, what inventory is available. When you don't do that kind of stuff, that's when you become, I think, extra emotional. You just see one house and all of a sudden that's the one you want. And, you're not able to think as clearly and as strategically as you would if you've done this kind of background homework, this, just invested time and energy into just having a good, thorough understanding of the market. So then when that home does come up in the future, you're able to really look at it from a level head and not make any rash decisions, and not let that emotion and just kind of, I don't know what another word would be, just kind of the overwhelming where you're making decisions that maybe aren't the best.
Yeah.
So with that, guys, if you don't have any other questions, we'll close this one out. But if you do, or if you think of any questions later on, just feel free to reach out to Ben or myself. We'll have all of our contact info in the email that we'll be sharing with you guys in a bit. And if you guys want to join us on the next one, feel free. And if not, we'll hopefully catch you guys soon. Have a good rest of your night. Thanks again for spending your hour with us.